Most people walk through life with their eyes open, but their minds asleep. They hear the news, they see the headlines, they sense that something is wrong, but they don't truly understand how deep the cracks in the system run. They still believe that tomorrow will look like today, that the financial world they grew up in will continue forever. But what if that assumption is the most dangerous investment decision you could ever make? What if everything you think you know about money, markets, and the economy is about to change? Forever? This isn't just another economic forecast. This is a warning, and it's one that economist Richard Wolff and many others have been shouting for years. The system we live under is reaching its breaking point, and the consequences when they arrive will reshape wealth, power, and opportunity in ways most people are completely unprepared for. To understand what's coming, you have to look beneath the surface. Because on the surface, everything looks fine. Stocks are still trading, the dollar still buys goods, the banks are still open. But under that surface, the pressure is building. Decades of bad decisions, unchecked greed, and systemic imbalances have created a financial time bomb. And that bomb is ticking louder with each passing day. Start with the basics. The United States is drowning in debt. Not just government debt, which has surged past $34 trillion, but corporate debt, consumer debt, and student debt. Nearly every sector of the economy is leveraged to the hilt. The government borrows to pay for its spending. Corporations borrow to buy back their own stock. Consumers borrow to maintain a lifestyle their stagnant wages can no longer support. It's a global addiction, and like all addictions, it cannot last forever. Debt is not inherently bad. Used wisely, it can fuel growth and investment. But when debt grows faster than the economy that supports it, when borrowing becomes a substitute for productivity, it creates a false sense of prosperity. It pushes growth forward temporarily, but at the cost of deeper instability later. And that's exactly what's happening now. Every dollar borrowed today must be repaid tomorrow, either through higher taxes, reduced spending, or inflation. But when the debt becomes too large to repay honestly, governments often choose the easiest path. They debase the currency. They print money. They devalue the purchasing power of every dollar you hold. It's a slow, invisible form of default, one that punishes savers, erodes wages, and rewards those closest to the source of new money. We saw this clearly in recent years. Faced with crises, central banks printed trillions of dollars out of thin air. They called it quantitative easing. They called it stimulus. But at its core, it was money creation on a scale never before seen. And the result was predictable. Inflation surged. Prices for housing, energy, food, and healthcare skyrocketed. Wages couldn't keep up. The cost of living exploded. And for millions of people, the promise of the American dream began to feel like a cruel joke. But this is just one layer of the storm. Another is inequality, a level of inequality so extreme that it threatens the very stability of the system. Over the past 4 decades, wealth has concentrated in the hands of a tiny fraction of the population. The top 1% now controls more wealth than the bottom 90% combined. Corporate profits soar while real wages stagnate. Billionaires add billions to their fortunes, while millions of families live paycheck to paycheck. This isn't an accident. It's the inevitable result of policies designed to protect capital at the expense of labor. It's the result of a financial system that rewards speculation over production, rent-seeking over innovation, monopolies over competition. And it's the result of a political system that too often serves the interests of donors and corporations instead of citizens. The problem with inequality isn't just that it's unfair, it's that it's unsustainable. Economies are built on consumption, and consumption is driven by the middle class. When that middle class is hollowed out, when workers can no longer afford the goods and services they produce, the entire system begins to stall. Demand weakens, growth slows, and instability spreads. And instability is already spreading. We see it in the protests on the streets, in the distrust of institutions, in the polarization of politics. We see it in the rise of populist movements on both the left and right, each promising to tear down the system and start over. We see it in the geopolitical arena, as nations, tired of a dollar-dominated world, seek new alliances and new monetary systems. This is how great shifts begin. Not with a single event, but with a series of tremors that signal something larger is coming. And Richard Wolff's warning is clear. The economic model we've lived under for the past century is reaching the end of its cycle. The combination of unsustainable debt, systemic inequality, geopolitical tension, and environmental constraints is creating a perfect storm. And that storm will force a reckoning unlike anything we've seen in generations. So what does that reckoning look like? It could take many forms. It could be a financial crisis that makes 2008 look small. It could be a currency reset where the dollar loses its reserve status and global trade reorganizes around new systems. It could be mass social unrest that forces radical political change. Or it could be a slow, grinding erosion of living standards, a generation-long decline where each year feels a little harder than the last. Whatever form it takes, one thing is certain. The world that emerges on the other side will look very different from the one we know today. And if you want to survive and thrive in that world, you cannot afford to be complacent. You cannot afford to assume that tomorrow will look like yesterday. You must act now. Start with education. Most people know almost nothing about how the financial system actually works. They don't understand money creation, monetary policy, debt cycles, or wealth transfer mechanisms. They think inflation is random, that crashes are unpredictable, that wealth is purely a matter of luck, that ignorance is not harmless, it's expensive. It's the reason so many people lose everything when the cycle turns. If you want to protect yourself, start by learning how the system really operates. Next, rethink your investments. In times of transition, the assets that thrived under the old system often struggle under the new one. That means you must diversify, not just across stocks and bonds, but across asset classes, geographies, and currencies. Hard assets like gold, silver, and real estate often hold their value during currency debasement. Commodity producers and energy companies can benefit from inflationary trends. Emerging markets and non-dollar-denominated assets can provide exposure to a shifting global order. Consider also the rise of alternatives, decentralized assets, digital currencies, and blockchain-based systems that operate outside the control of governments and central banks. These are volatile and risky, but they also represent a potential hedge against systemic collapse. The key is not to bet everything on one outcome, but to prepare for multiple scenarios. And above all, build resilience, not just financial resilience, but personal and professional resilience. Diversify your income streams. Build skills that will be valuable in a changing economy. Reduce your reliance on debt. Strengthen your network. In a world of uncertainty, flexibility, and adaptability are your greatest assets. The people who thrive during great transitions are not the ones who predict every twist and turn. They are the ones who see the big picture early and position themselves accordingly. They are the ones who act before the crowd, not after. They are the ones who understand that crisis and opportunity are two sides of the same coin. This is the mindset you must adopt now, because the warning signs are no longer subtle. They're flashing in front of you. Rising debt, stubborn inflation, weakening currencies, deepening inequality, political dysfunction, social unrest, geopolitical realignment. Each of these forces alone would be enough to shake the system. Together, they form a storm that will change everything. Most people will ignore the warning. Most people will continue to believe that it can't happen here, that the dollar will always be king, that the stock market will always go up, that governments will always have things under control. Most people will do nothing until it's too late. But you don't have to be most people. You can choose awareness over ignorance. You can choose preparation over complacency. You can choose to act now before the storm hits and position yourself not just to survive, but to thrive. The truth is, no one knows exactly what the next decade will look like. But one thing is certain: it will not look like the last one. And in times like these, doing nothing is the most dangerous choice of all. History is full of moments like this, moments when the old order crumbles and a new one begins. In those moments, wealth is not destroyed, it is transferred, from the unprepared to the prepared, from the complacent to the proactive, from the fearful to the bold. So ask yourself, which side of that transfer do you want to be on? Because the future is coming, faster than most people realize. And when it arrives, it will not care whether you were ready or not. Most people have no idea what's coming. Now you do. And that knowledge is your greatest advantage. Use it. Build with it. Invest with it. Protect your family with it. Because the next chapter of the global economy is being written right now, and if you understand the warning, you still have time to write your own ending.